Morning, everyone. Welcome to a midweek update. This is, a challenging one. It's been a crazy weekend from Friday, and of course, everything happening in Israel with Hamas. We're not here to comment about anything political, but of course, that type of shakeup does put a lot of the markets, in cautionary mode. Yesterday, we had a lot of mixed messages from the Fed in regard to rates. Mortgage apps were down about 6% last week, which isn't much of a surprise. We expect to see that continue. Today, with that mixed narrative, we saw that the CPI numbers, there was a 0.5% rise, which really broke that narrative of the Fed saying, well, maybe we'll stop raising interest rates. Maybe there's a bit of room here. I think we're going to keep going for a while, and we've put out a reaction video, both with Larry Fink and Jamie Dimon, which gives their insight as well as to what they think as far as a company rates are going. Check that one out. Gold is up $10 as well. It's pulled back the last couple of weeks, but we're seeing it possibly rise up once again with flight of safety, flight of capital towards something with a bit more stability. One of the biggest issues that we're facing right now is not only, let's be generous and say, sticky inflation, a lot of bloated inventories for companies, and a lot of U.S. consumers not as interested in spending money. All of that is going to have an impact on corporate earnings for the following year, for next year. So let's see how things go. But really, the biggest thing we have to look at is that the U.S. has crossed a threshold here of $33 trillion. That national debt, that's staggering. That's $807 billion to service its debt securities. That overshadows the defense budget for military programs, which is about $695 billion. Now, of course, a lot of that COVID-19 pandemic expenditures were $1.9 trillion, along with the America Rescue Plan Act. That, of course, people have very mixed feelings about because there was a lot of misuse of money there. But that's hard to factor in with all things. But that's a big number. We also see the cost of servicing the debt is about $2 billion a day just for the national debt. And that also has massive strain, not only on the Fed, because it owns about 20% of the debt, but also on corporations and individuals that want to secure any loans, want to refinance, or need a loan in order to expand, to encourage growth. And if they don't happen to be in this infrastructure bill or the diversity kind of area that the progressives are focused on, you may not get any financing and you may not get any money. So because of the ideological bent that they have, they've put themselves into quite a situation right now. So Philip Braun, a finance professor at Northwestern University, says the government could have refinanced its debt while interest rates were low, but failed to do so. And that's resulted in their own higher borrowing cost. We also see that China is dumping US dollars faster than you could possibly imagine. They used to be the number one owner of US debt, and they're really trying to drop that as fast as they can, and they're buying a ton of gold. So now, as far as the ownership of America's debt, it's two parts to look at: intergovernmental debt, which is $6.8 trillion, and that which is held by the public, which is $26.2 trillion. Foreign governments, private investors, state and local governments, and the Fed constitute the rest. I want to highlight that we're doing an interview with Fred Jones, who used to work at Lehman Brothers on their bond desk, where we're going to go through his expertise in the past of looking at bonds and inflation and interest rates and get a sense of where he thinks things are going as well, and especially how that will impact a retail investor. Because after all, big banks and the Fed and huge corporations, that's one thing. That's your overall economy. But just the average Joe, what's it look like when you try to go refinance your house here in Canada or even in the States? Depending on whenever you set up your mortgage, if you'd learned anything from 2008, hopefully you locked in a 30-year. I know from 2022 on, a vast majority of those applications were locked in 30-year rates, which is very promising. But really, in the scope of all of the mortgages, I haven't looked to see what percentage that actually is. Because, as we mentioned, of the Israeli and Hamas issue, that's going on. Defense stocks have surged, so your likes of Lockheed Martin, Northrop Grumman, General Dynamics, L3Harris, Raytheon, you name it, those have gone up. Obviously, they were underheld before. The billions given out to Ukraine, that certainly helps that defense industry as well. And if this escalates further, that flight to defense will certainly make a lot of money. And you can have mixed feelings on profiting from that. That's up to you, but those stocks are doing well. On a lighter note, Birkenstocks has an IPO today, and it's IPOing at $46. Also, Exxon Mobil is down about 4% on their announcement to buy a Permian shale giant Pioneer Natural Resources for $59.5 billion in an all-stock deal. So that is very interesting as well. More on that later. Novo Nordisk popped more than 3% on heavy volume because the Danish drug giant ended a phase 3 test early in regard to Ozempic, a diabetes drug to treat kidney disease. That also helped Eli Lilly surge a bit because they also have a similar type of drug. So we've seen an interesting mixed market. Definitely an interesting week. There's much more on the debt inflation side to be concerned about, and certainly on the geopolitical front, as things in the world become much, much more chaotic. And that, after all, stems from an underlying weakness of leadership in the West, especially starting at the US and working its way down. Make sure you reach out to via Business Network and let us know what you think. Give us your opinion, your impressions, and where you think markets are going and what we should be looking at as we go through this long process of a transition and what that looks like for the short term and the long term. We look forward to hearing from you.